Yo, 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 welcome back, guys. What a week we had in the market. S&P 500 crushing it, equal weight crushing it, J-Pow crushing it. Bulls just running wild on the market, right? The Bulls just running wild on the market. But the market, like most things, has an Achilles heel. So today I'm going to talk about the S&P 500 Achilles heel and just have it be something that we focus on in the market. It should be something we're aware of the weakness that could exist in the market because we don't want to be caught off guard by it. So without further ado, guys, let's kind of dig in here. So who was Achilles, right? Greatest warrior of the Greeks in the Trojan War. His mom and dad, right? He had a Greek goddess mom and then a human dad. His mom was worried of his weaknesses as being a human, so she dipped him in the river of Styx, right? He was invincible except his heel, right? He had one vulnerability. That's how a lot of people see the story. But he also had another vulnerability, which was his emotions. One of his best friends died in the war that they were fighting, and that's what kept him going back to the war. And that actually led to his eventual death, where his heel was severed and he died. The lesson in that is one, to know your Achilles heel. What is your weakness? And two, it might be your emotions that is part of that weakness that allows it to be exploited. Because while the emotions may not kill you outright, it can keep you in a situation where your weakness eventually does. Think about the market. You don't set a stop loss. Your weakness is your ego associated with that. And eventually, right, you blow out an account. You have over conviction in something because your weakness is your conviction in a valuation, in a price target, in something outside of your strategy. And that weakness can lead to ruin. So, what is the Achilles heel of the S&P 500? What can lead the S&P 500 to ruin? That's the question. It's concentration, right? It's rotation. People will talk about rotation being the lifeblood of a bull market, sure, but it's not the lifeblood of the S&P 500. It's the Achilles heel of the S&P 500. Let's take a look. These are the 11 sectors that make up the S&P 500. And you can see that technology, financials, consumer discretionary, and consumer services make up over 50% of the weighting. You see at the bottom, materials, real estate, utilities, energy, consumer staples make up less than 15% of the S&P 500. So if we see rotation in the S&P 500 out of technology, financials, consumer discretionary, consumer services, and into energy, utilities, real estate, materials, consumer staples, that is the Achilles heel, the armor that is on the Achilles heel coming off. Just something to be aware of. It's not currently occurring, right? I have a lot of charts to show that, but understanding the structure of the market allows you to be aware of what the Achilles heel is and protect against it. If Achilles would have put an armor on his heel, he would have been fine. If he went in a rage, went back into fighting in the war, he probably would have lived. So the goal here is to be aware of the Achilles heel of the S&P 500 so we can protect ourselves against it. So let's kind of dig into these individual charts and show you some tricks that you can use to understand, hey, is the Achilles heel exposed here or is it protected? We'll start with one of my favorite charts in the market. You can look at this one ETF, makes up 7 stocks in the S&P 500. The Mags Roundtree Big Tech ETF makes up Tesla, Nvidia, Amazon, Microsoft, Google, Apple, and Meta. They're equally weighted in this instance. And the point of that is to show as a whole, how is this herd of stocks doing? And these 7 stocks make up 33% of the S&P 500. Almost a third of the S&P 500 is these 7 stocks. So if we know that, we can use this to understand if the Achilles heel is exposed. This is the Achilles heel chart. And look at it. It looks beautiful. Beautiful base. What did we have? We had that pullback, retest. And what do we have today? We had that follow through. Look at RSI in that top panel. That'll show the strength of the armor if we're using that analogy still. Right? RSI is that momentum. Are the bulls in control? Look at RSI, perfectly stayed above 50. Right? And that 50 is showing that it's protected. The bulls are protecting the Achilles heel. The Achilles heel is not exposed. So if the Achilles heel is not exposed, what should Achilles do? Fight. Go fight. Be long. Have exposure to the S&P 500. Have exposure to the market. Right? Because the Achilles heel is protected. And so we can use this chart, one, to look at the Achilles heel, and then two, understand if the Achilles heel is exposed, right? Those other areas of the market, the other soldiers in the war better be fighting to protect us. Because if that Achilles heel is exposed, we have a chance to go down. Okay, technology, the largest component, as we talked about, of the S&P 500. Beautiful looking chart here. What do we have? First thing I want to focus on is this bottom panel, highlighting XLK versus the S&P 500, technology versus the S&P 500. Seeing, right, if we consider this part of that, seeing if there's relative strength here. When there is strength in tech, it's hard for the S&P 500 to go down, right? Achilles is fighting strong. We start to see it kind of wait out here, but we know we're in a bull market, right? Because we're above that 200-day, and that 200-day is upward sloping. So this bearish looking top that has been forming over the past couple of days, couple of weeks, we knew was probabilistically bound to fail. And we look at this, and what do? We look at it and we say, okay, we have a bearish looking pattern, but we have clean risk reward if it fails. And then today, what do we have there? That upside follow through in the market. And that's what we like to see in bull markets. That's what we like to see in the market overall. And that's what we're seeing right now. We're seeing technology get that rotation back into it today. We're still seeing that Achilles heel protected overall. We're seeing 33% of the market continue to hold up strong. Let's look at consumer discretionary, another large component, another base, another huge candle today. The candle today, some might call that a God candle, right? It covers the last 3, 4, 5 days of trading in one candle today. It was up 3%. Right? This is a risk on area of the market, looking good. Right? The Achilles heel is protected. It's not exposed in this market right now. And this is made up, largest components, Tesla and Amazon, right? Those are the two largest soldiers in this ETF. Next one, financials, right? One of the largest components of the S&P 500. Also looks really good. I think this is the second largest holding, right? It's about 13% of the S&P 500. And what do we see here? I talked about this past week. We see this almost topish looking mini top consolidation happening above support, above an upward sloping 200-day moving average. These tend to fail. These tops tend to fail. You had this RSI starting to make lower highs, right? And then that failed. This breakout here. So we have well-defined risk, and we have breakouts occurring underneath the surface, right? After kind of a sideways market. We've had sideways price action to a degree underneath the surface. This is the time to start adding exposure again, right? It seems crazy on a day like today, but today was confirmation, and we'll get into a few more charts like that. But overall, financials also looks great. Achilles heel is not exposed. Communication services, right? Third largest sector in the S&P, or fourth largest sector, about 10% of the S&P 500. Once again, base on base breakout, pullback, retest, breakout, RSI in the bullish regime, right? All these areas are looking good in the market. The largest components are holding up well. The Achilles heel, although it exists, although it is a weakness, it is not exposed. That's the point people miss. They talk about a weakness, but the weakness is not exposed, right? Everyone has a weakness. It's just, when is it exposed? When is it not exposed? When is it vulnerable? When is it not vulnerable? That's what you got to understand about the market in the context of price action, because that can be elusive to, right? It can create an illusion underneath the surface of what breadth is doing, or what breadth underneath the surface is doing, because of the strength underneath the surface. right? And to be fair, if you think about the concentration in the S&P 500, the larger the concentration risk, right, the less breadth matters because all of it is wrapped up in a few names. And so what you'll see a lot of fun facts, fun stats right now where I believe it was Tuesday this week, the S&P 500 had 70% of its stocks up in the S&P 500, 70% of the stocks were up and the S&P 500 finished lower because the 30% that were down made up the large majority of the S&P 500. Last Thursday, the 14th, I believe, we had 70% of the stocks in the S&P 500 down, and the S&P 500 finished green. So understanding that structure of the market, understanding what the Achilles heel of the market is right now, is important to understanding whether or not you should be fighting or running from battle. And right now is the time to be fighting. So let's highlight some of that. Okay, we understand from market cap weighted perspective, the market looks solid. Then we can use that information to say, okay, if the market cap weight is breaking down, if Achilles heel is exposed, how are his soldiers doing around him that need to fight? Look at the equal weight S&P 100, new highs today, right? We just had this consolidation base. We kind of had this little fake out, right? So what we see a lot of times, like I mentioned, you see the bearish patterns fail in bull markets. So when people run data sets, because a lot of people will say, well, I think this pattern works 60% of the time, or this pattern works 40% of the time. What they're then not doing is they're not looking at that data set and saying, okay, bearish patterns work this percentage of the time, then pull back the layer of that data set, that study that was done, that quantitative analysis that was done, and then say, okay, it worked 40% of the time. How well did it work when stocks were above their 200-day? And you'll see it's probably like 10, 15, 20% of the time. Because when you analyze trend, you realize the patterns that work in an uptrend tend to be in the direction of the underlying trend. And that's why people kind of get confused and don't understand the nuances of technical analysis. But it's that first you start with that underlying trend and you always allow that to be innocent until proven guilty. And when we're uptrends, you allow them to be innocent until proven guilty. The assumption of probabilities can be that bearish patterns are going to fail. And then if they don't, that's information. But when they do, it's a clean risk reward scenario. And like in this chart, you had that clean risk reward scenario where we pulled back, hammer candle, follow through, consolidation, breakout. So breadth looks great underneath the surface. We not only have protection on the heel, but the soldiers are working. The market can't get any more bullish than that. Look at the S&P 500 equal weight, right? Breaking out to all-time highs today. Beautiful looking chart, up almost 2% today. We had the basing that occurred underneath the surface, but now we're breaking out. So we have confirmation of breadth in the market. We know Achilles heel is protected. We should be fighting. We should be looking for opportunities to be long this market. Could the market pull back? Of course, it always can pull back. But we should be on the field for now. That information will come, right? And when it comes, we'll adjust, we'll reposition. But overall, breadth looks great. Achilles heel is protected. We should be fighting this fight. Last chart I wanted to highlight here is looking at breadth underneath the surface, is looking at the percent above the 20-day, look at the percent above the 200-day. This is the S&P 500. You can see here that we're making year-to-date highs in percent of stocks above the 200-day moving average. So if we take that information and think about it from the context of, okay, the majority of stocks are above their 200-day, that means the majority of bearish setups are probably going to work. The majority of bearish setups are probably going to fail. Right? Because we take that quantitative data, we apply it through the filter of trend and understand that look for bullish setups because they're probably going to work. Avoid bearish setups because they're probably not going to work. 70% of stocks are trading above their 200-day. 70% are in uptrends. And then we had a breakout today in percent above their 20-day moving average. So we have long-term confirmation. We have a short-term thrust. Like the market is so bullish right now that is the worry. Like that becomes my worry is breadth was a worry. We had that wall to climb. Now, what are people worried about? Hopefully it's something economically. Hopefully it's sentiment still positioned incorrectly. Those would be the things I would like to see because from a technical perspective, it's really hard to make a bear case right now. So hopefully people are relying on things that aren't related to price and that's how they trade because then we can take money from them. As they sell, we can buy from those people because then there'll be future buyers in the market. So that's how I'm seeing it. That's why I wanted to focus on the Achilles heel because if you can understand the weakness, you can know when it's vulnerable. And right now, it's not a vulnerable weakness in the market. The thing I want to do now is, Gene, I'm going to switch screens. I'm going to take you guys through live examples of why focusing on the Achilles heel and then using that with the context of breadth allows you to make great decisions about your allocation to the S&P 500. So I'm going to switch over to that screen. What I'm going to show you guys is we'll have in the top panel a measure of breadth. In the middle panel, we'll have the S&P 500, which some consider the stock market or the market. And then the bottom panel, we'll have the Achilles heel, which is the Mag 7. We're using Mag 7 to represent it. So as you guys see here, breadth in the top panel, the market in the middle panel, Achilles heel in the bottom panel. So what you'll notice is what I'm trying to highlight here is when there is bearish breadth divergences, but Achilles heel is protected, right? The largest components are doing well. The breadth divergences tend to fail because that concentration risk literally means that breadth matters less than ever because the market's more concentrated than ever. That makes sense? It's just math. So you can see here this example. Back in May through July of 2024, right? Breadth started to break down, right? The percent above its 20-day went from 70 to 35, but the market made higher highs during that time. How could that be? Achilles heel was protected, and Achilles is the greatest fighter, right? The greatest warrior we have. His Achilles was protected. Okay? We look up here. We look at October through December, right? October through the end of the year. We had some breadth divergences, allowed people to climb, allowed people to get worried. The market continued to make higher highs. Why? Because Achilles heel was protected. And then you look here. We look at the start of this year. Let's look at the start of this year. I wanted to save this one for live because I just wanted you guys to be able to see. If we look at the start of this year, you can see breadth broke down. Okay, this doesn't need to be rocket science. Breadth broke down. Okay, was Achilles heel protected or was Achilles heel vulnerable? Well, Achilles heel was kind of trading sideways, right? And then it was vulnerable. And then what happened to the S&P? That's when the S&P actually corrected, right? Because of that concentration risk, right? So we can call this the Achilles heel chart because if his Achilles heel is exposed, if the market's Achilles heel is exposed, that's when we're vulnerable. We look over here, right? June through now, essentially, right? June through July, right? People were talking about breadth. Breadth was a little weak in the market. Achilles heel wasn't exposed. Okay. People are talking about breadth right now, right? And this divergence between new highs and not new highs and percent above the 20-day. Achilles heel was not exposed, right? And so then what happened? We had a breakout because the underlying trend was up. The Achilles heel was not exposed, and the market now making new all-time highs again, off to the races. So that's the lesson, guys, that I wanted to focus on today was understanding the Achilles heel and understanding kind of the positioning of the market overall. Because understanding what's underneath the surface is what allows us to make great decisions, execute our trades better, and become better investors. So that's what I had today, guys. I appreciate the love you guys are showing me. In terms of individual charts, Sunday, I will do my Sunday stock list where I'll send out probably 10 to 12 trade ideas. I'd also recommend watching last week's Thompson's 2 cents, right? I just did, it's called All Gas, No Breaks. I went through 20 charts in 20 minutes that I liked. And so if you're looking for setups and individual ideas, I'm going to do that show once a month where I just rip through 20 to 30 charts. And then some other research I'm putting out right now. Saturdays, you can get the Hostile Charts blog. That'll be a little bit more encompassing of the market regime that's taking place. And then, like I said, Sunday stock list is just a bunch of trade ideas that I like, some charts that I'm stalking going into next week. And then Tuesday, Thursday is just a quick hit note that I put out. It's about a 2 to 5 minute read. So I appreciate the love, guys. Last week was one of my most viewed videos. If you guys could just take the time to like and comment on this video, that's one of the easiest ways you guys can help me. And comment some charts that you guys want me to take a look at, and comment the ticker and the time frame. And next week we'll do a chart request at the end of the show where I take all those requests. I'll take every single one of your requests. So comment the ticker and the time frame you're looking at, and I will take those requests. So I appreciate the love, guys. Understand that the Achilles heel is protected right now and the soldiers are on the field. So let's battle. Peace.